Hello traders, welcome back to the channel and to a new video. So today I'm going to be talking about a order flow topic that I've gotten some inquiries about. I talk about this in a lot of great detail in my order flow trading course, but I wanted to just make a general overview here for all the viewers on YouTube that I know are very interested in the order flow content that I'm sharing lately. And we're going to be talking about CVD, or Cumulative Volume Delta. This is the Sierra chart platform, but pretty much, any professional trading platform that you use is going to have a CVD indicator. And before you ask, TradingView, there's some custom indicators that are made for it. However, since TradingView doesn't really have true tick data, specifically talking about CME futures, which is what I mostly trade on a day trading basis, I don't really use any of those indicators on TradingView. I don't really trust it. I like to use it on a platform that gives me full market depth data, tick data, such as Sierra chart. Okay, so this indicator again is just found under the studies, and you're just gonna go into the letter C, and it's called Cumulative Delta Bars Volume right there. And so that is going to go right here. Okay, so what we're gonna have here, this is a 5-minute chart on the S&P 500 futures. This is our price chart, and here we have the cumulative volume delta, and I'll go over what all of this means. Down here, I just added this temporarily. This is what they call the numbers bar values, and this is basically just going to give me the delta information for each one of these candles that we have. So basically, this could be any time frame you're looking at. Every candle on this chart is going to have a corresponding delta candle that we're going to have right here. Okay, so every candle here is going to have their corresponding cumulative volume delta candle below. I'm going to zoom in just so you can see the numbers that are underneath here. This is my session volume profile. This is 9:30 a.m. when regular market hours start, and as you can see, we have here as volume minus vid volume. This is the definition of what delta is, and I talked a lot about this in my footprint videos, but basically delta equals aggressive market buy orders minus aggressive market sell orders. Okay, so delta basically shows us the difference between aggressive buyers and aggressive sellers. So for example, if we take this candle right here, you can see this was a big red candle on the 5-minute chart. We have a big red delta candle here, and we have a total delta of minus 3,257 contracts or volume traded on this candle. This is the difference between the buyers and the sellers. So then obviously we would say that the aggressive sellers had the upper hand in this candle because we have a very highly negative number of delta, meaning that the aggressive selling counteracted and exceeded the aggressive buying. We got to remember that in markets, there's two types of participants. There's passive participants and aggressive participants. Passive participants are the ones that, if we're looking at a DOM like we have here, all this resting market is closed now. We have very low numbers because we have not yet opened for Sunday night. But we have here a DOM. We have our bid on the left and our offer or the ask on the right. This is passive buyers that have limit orders set at different prices. This is passive sellers that have limit orders to sell at different prices. In order for these levels to get filled, we need aggressive traders to fill those orders. So for example, here, let's assume the market is open and the price currently is 43.29.25. You can see that there's 3 contracts up here resting at 29.50. So that means that we need an aggressive trader or traders to hit the market buy on at least 3 contracts and then that would make the price rise up one tick into the next level, etc. So aggressive traders are the ones that actually make the market move because they're filling in the orders of passive traders. Remember, for every buyer there's a seller, for every seller there is a buyer. It's a zero-sum game. So you need sellers in order to fill buy orders, and you need aggressive buyers in order to sell limit sells. Okay, so the cumulative volume delta is basically a representation of the aggressiveness of sellers on each candle. Now you're gonna see sometimes, for example, we have candles that match, like this one's big red candle up on the price, big red candle on the delta. But other times we have some differences in the candles, and this is where we're gonna be tracking what we call delta divergences. Okay, for example, let's look for one, like for example right here you can see we had a pretty big green candle, but yet we had a small aggressive buying candle. So this means there was not a ton of liquidity up here, and the passive buyers were able to just clear out a lot of this price levels with very little aggressive buying, was able to lift the markets up like this. Then we have scenarios, for example, like this, which we're going to talk about, which is what we call single candle divergences, where we have a green price candle and yet we had a big red aggressive delta candle to go with it. So you can see minus 36.50, and yet we had sort of neutral green candle are up around the highs right here. What this indicates is that in this case, there's a lot of aggressive sellers that are not able to make the market budge lower. So what is this telling us is that there is some buying absorption going on here by passive limit orders at these levels. You can see we have this high volume node, and we're right around the edge of this node, which usually indicate some kind of support into these areas. Okay, so that's pretty much the basic overview of the cumulative volume delta as regards to individual candles. And now let me actually go and remove these numbers from the bottom. We don't really need it anymore. And now we're going to look at just basic structural divergences. Okay, so in general, we assume that if we see a market that's rising, then we're assuming that there's a lot of aggressive buyers going in line with it. But as we're gonna see, this is not always the case. And this is what we call just general divergences between price and the cumulative volume delta. And now the utility of delta in this case for me is just to try to see how much effort by buyers or sellers, what effect is this having on the market? Are aggressive buyers in line with passive buyers and we're pushing together in one direction? Or is there some kind of divergence where we see prices not going lower even though there's a lot of aggressive selling, or vice versa? If we take, for example, here, this session profiles, the ones that have blue, these are extended hours, so this is a lot less volumes. We're going to focus mostly on regular trading hours. This is 9:30 all the way up to 5 p.m. This is regular market hours right here on the chart. And so as you can see, if we look at an example like this, we notice that price is making lower highs, and yet what do we see with delta? We see that right here we have very aggressive buying, and we're pretty much at the highest level of delta, of cumulative delta that we had since the start of the session, but yet prices are not at the highest they were since pretty much at 11:30 right here when Europe closed. We had a shift and the flows started going down. Okay, so what this indicates to me is that aggressive buyers are fighting really hard, and you can see we did have a quick move up here right into this previous support that was broken. We retested it, but yet a lot of aggressive buyers were trapped right here, and there was a big absorption by passive selling that brought the markets down. And usually what I found is that cumulative delta is going to be a little bit lagging, but once they get both in sync, we're going to have very quick movements like you can see right here. You know, we came up here. Like I said, the market had very aggressive buying, and yet we're not able to break through this resistance here. And then on the next candle, we had a big bearish candle here on the 5-minute, and yet delta has not completely turned over. But now on this next big bearish candle, you can see that now delta is starting to sell. Aggressive sellers are realizing that this is potentially a capping or a swing high here. Also, we have the confluence, you know, there's this trend line as well that we just retested. And then in this case, you can see how as soon as aggressive sellers got in sync, this market just reversed really, really fast. If we go forward and just look at other sessions, you can see, for example, a regular hour session in which the cumulative delta was pretty similar in line with price. You can see we started off bullish, both pushing up. Right here, we did have a pullback, and you can see price did make lower lows, and yet delta was pretty much sideways. So if delta is going sideways, I'm not too concerned with that. That means that more limit buyers and sellers are in control. But then you can see right here, we got this huge price push to the upside, and delta started responding accordingly. And then throughout the rest of the day, prices pretty much spent the rest of the time mostly sideways. Delta was just very slightly up. You know, I wouldn't call this a huge divergence, but you can see how in this case there was some progressive buying which didn't pay off until pretty much the end of the session, where we did have a push up and a close near right at the highs. One thing with cumulative volume delta is I personally use it mostly just on lower time frames. I don't really look at cumulative volume delta on higher time frames like the 1 hour or anything like that, because I think this is more useful to look for shorter term divergences in my day trading. But again, this is just my personal trading. This, as you can see, this was a day that we had a very significant divergence. Price pretty much opened up, pushed up, and spent the rest of the day just sort of trending down. And then we had cumulative delta just progressively pushing up. Okay, what this tells us is this was a day where all this effort and aggressive buying by the aggressive buyers really did not pay off. You can see we retested VWAP twice and just rejected very strongly both times. So this means if you see an area like we had right here, this was a very big absorption that we had going on. And you know, we could go into a footprint chart if we want to look at what's going on inside these candles in more detail. But as you can see, we had a big high volume node here, and we were just rejecting right at the highs underneath VWAP. And all this aggressive effort to buy was not paying off. Price could not break and make a higher high. And then eventually we just continued breaking down, and delta just pretty much turned sideways for the rest of the session. So again, we have two main types of divergences. We have the general structural divergence, and we have the individual candle divergence. I wouldn't worry too much about the individual candle divergence, simply because depending on what time frame you're looking at, price is just going to be split differently from one time frame to the next. So this indicator that I just enabled here, it highlights the divergences between the cumulative volume delta candles and the price candles right here. This is a custom indicator. This is not available by default on Sierra chart, but this is an indicator that I had purchased, so it is not something that I can just share for free. But again, this is something you can do manually. I just got this just to have, just a more clear idea. But again, this can throw off a lot of false signals, so you do not want to just trade blindly off of any of this divergence signals. If we go into a tick chart, as you know, I like to use a 3000 tick chart and a 5-minute chart when I do my day trading on the S&P 500. Here we have same divergences marked, and you can see, like in this case on the 3000 tick chart, a lot of divergences marked. So there is a lot of false signals. That's why location of the signals is very, very important. So what would be a good divergence that we have right here? Well, for example, this for me is a good divergence because we had price pushing to the lows of the session. We pushed back up, retested, and started pushing up again, making a higher low. And you can see we had 2 consecutive candles where we have red aggressive cumulative delta, and yet price is pushing up. This for me signals that these aggressive traders that think this is just going to continue trending lower are getting absorbed right around these lows here. And if we would look at a footprint chart, I would also look for some high volumes to have come into this area. But you can see how in this case we got this bullish divergence signal, and you can see that market did push up a little bit more from there. Another good signal here, for example, we have this swing high right here. We just popped over this liquidity or this swing high and closed down below, and you can see we had a bearish hammer candle right here, and yet we printed a green delta bar right here. So right here we have a swing failure of this, and then right after that happened, you can see that both aggressive sellers and limit sellers got in sync, and we had a very quick liquidation move coming all the way down here. So these individual candle divergences are especially good when we are revisiting old significant swing high and low levels. And what we're looking again is just for trapped traders. We're looking for aggressive traders to be caught on the wrong side of the market. But again, that's pretty much how I like to use delta. I just want to see how in sync the passive and the aggressive buyers and sellers are and use that in my analysis. Let's pull back and just go see other days. So for example, here you can see how we had an opening drive here. We do have, in this case, price pushing lower. This is the one I had shown before. The aggressive sellers are not as in line with what price is showing us. So this shows us there's some low liquidity at these areas. But then right here, aggressive buyers start turning right here. And once you see price in sync with the cumulative delta, you do not want to stand in front of this unless you see a big change in the aggressive buying or selling, because when we have moves like this is when people start trying to catch a top. Try to short here, pushes up, stops them. They try to short here, pushes out, stop them, try to short here, pushes up. And you can see in this case we just have relentless buying here by the aggressive buyers, and price just keeps pushing up and up. But then right here, we got to this high, and then suddenly here you can see how delta starts making new lower lows, and now we're getting a shift in tempo and rotations, and now we can look to then get in on more movements. In this case, you can see we start trending into the downside. But that is pretty much a quick overview of cumulative delta. Again, it is a measure of the aggressive buying and selling, and I like to use it as a confluence with all my other analysis to look for divergences, whether structurally or on a candle-to-candle basis at important inflection points, and look to position myself in the likely direction where we're going to be punishing trapped traders. That's it for the video. Hope you enjoyed. Have a great rest of your week, and I'll see you in the next one.